Hello everyone, welcome to Cheongfuli Weekly Report. We bring you the latest price and market analysis of China's steel market every week. Spot prices edged higher this week. Up to now, spot rebar prices have risen by 10 yuan per ton from last week, while spot hot-rolled coil prices are up by 30 yuan per ton. Despite the recent price increase, market sentiment remains cautious with overall low trading activity. From a macro perspective, the year-on-year growth of the unadjusted US July CPI slowed to 3.4% and core CPI moderated to 2.5% in line with market expectations. July PPI was flat month-on-month, with its year-on-year gain falling to 4.7% from 5.5% in June. Core PPI rose 0.2% month-on-month, below the consensus forecast of 0.3%. Release of these core inflation figures has dampened market expectations for a September rate cut. On August 13th, 112 coal washing plants in Yulin district, Yulin City suspended production comprehensively for safety inspections. Production can only resume upon passing acceptance by September 12th, tightening coking coal supply. The People's Bank of China released the Q2 2026 China Monetary Policy Implementation Report, stating that it will promptly plan and roll out practical and effective incremental policies to strengthen counter-cyclical adjustment. On the supply side, total output saw a modest increase. Total supply of the 5 major steel products reached 8.1101 million tons this week, up 50,500 tons week on week. Meanwhile, weekly hot metal output stayed flat week on week. By product, rebar output fell to 1.8255 million tons, down 72,500 tons week on week. Hot-rolled coil output increased to 2.9676 million tons, rising 90,300 tons week on week. Demand rebounded markedly on a week-on-week basis. Apparent steel consumption stood at 8.3564 million tons this week, rising by 470,500 tons week on week. Specifically, apparent consumption of rebar hit 1.9431 million tons, an increase of 158,300 tons week on week. Apparent consumption of hot-rolled coil reached 3.0393 million tons, up 181,600 tons week on week. The off-season is drawing to a close, bringing about this seasonal demand recovery. Although the peak season is approaching, market participants remain relatively cautious about the outlook, and speculative demand stays weak. In terms of inventories, total inventories of the 5 major steel products declined this week, totaling 16.2856 million tons, down 246,300 tons week on week. By product, rebar inventories stood at 6.9863 million tons, falling 117,600 tons week on week. Hot-rolled coil inventories were 4.3878 million tons, a week-on-week decrease of 71,700 tons. Overall, domestic steel spot prices posted a moderate gain this week. The sector saw rising supply, improving demand, and falling inventories, pointing to a sequential improvement in fundamentals. We are now at a critical juncture of transition between off-peak and peak seasons. The marginal improvement witnessed this week cannot be taken as confirmation that the off-season has ended, and further data is needed for verification. On the supply side, given steel mills' low profit margins, hot metal supply will remain tight. On the cost side, coking coal prices rebounded, driven by domestic coal mine accidents and production suspension for safety checks at Yulin coal washing plants, delivering cost support to steel prices. Market expectations for the future remain generally cautious, and steel prices are still constrained by real end-user demand. Trading sentiment for raw materials has been strong recently. Steel prices are expected to run in a range-bound and moderately upward pattern in the short term. Going forward, key points to watch include US-Iran conflicts, changes in steel supply and demand, as well as the resumption progress of coal mines. Based on the above analysis, operational suggestion: adopt on-demand procurement for steel and control inventory risks. Institutional analysts hold the view that steel demand is currently in the transition phase between low and peak seasons. Compounded by weather disruptions such as typhoons, the recovery in demand remains uncertain, as does the rebound in end-user manufacturing activity. No notable supply-demand gap is expected to emerge in the near term, capping upward price potential. Steel prices are projected to stay range-bound until tangible improvement in demand materializes. In summary, steel prices will generally maintain a volatile trend. Close attention should be paid to changes in steel inventories, domestic macro policies, and the supply of coking coal. Okay, feel free to leave your thoughts, questions, or any related inquiries in the comment box below. And if you found this video valuable, don't forget to follow us for more updates. See you next week.